Hello, this is Steve Spangenberg coming to you live with another tax myth. This is a series that I'm doing to help expose some of these tax myths so that you can get on the right track and get good advice and profit from that advice, which is the key. So just a little bit about me, Steve Spangenberg. I'm a home-based business tax expert. I've been doing taxes ever since I've been 14 years old. I'm 58 years old. That means I've been doing now for 44 years. And I focus primarily on home-based businesses such as Mary Kay, Young Living, doTERRA, internet marketing people, bloggers, those type of people that work from home. And I've written several books on the subject and have clients all over the United States. And just as a disclaimer, this is not meant to be legal advice, and every tax situation is different, so I would check with my tax preparer as to your specific situation. Now, what we're going to go over today is this. We're going to go over, I didn't make any money in my business, so why should I file? A lot of people say, and a lot of accountants and CPAs, I mean, people come to me over the years and they say, well, my accountant said last year I don't need to file since I didn't make any money. I said, well, was it your intent to make money? Absolutely. Okay, did you do business? Did you run your business? Yes, I did. Did you keep records of that? Yes, I did. Well, why wouldn't you record your business and take a loss? Well, he said it's not worth it, or she said it's not worth it. Well, my philosophy has always been this. I don't know what is worth to people. I don't know what it's worth. What's it worth? Is filing your business and getting $100 extra refund worth it? To me it is. Maybe to somebody else $100 is not much. Maybe to other people it's, oh my gosh, I'm saving money like crazy. And just by the way, you hear my neighbor's dog in the background. I might have to kick him out here because they're snoring too loud. Okay, go downstairs and see somebody. That's the fun bit of working from home. But he's making the video crazy. So here we go. So I don't know what it's worth to you, but I'm going to show you this. Now, at the end of this video, of course, I'm going to give you the link in the description to buy my income tax reduction package, because this is what you would like to have in your arsenal so that you can take advantage of everything that's out there for you as far as a business owner goes. So there's three things. There's a list of like 27, but there's basically three things that you have to really do to prove that you're a business to the IRS. Number one, you have to have an intent to profit. This is evidenced by a business plan. Do you have a written business plan? Number two, did you work your business in a consistent and persistent manner? And number three, did you keep good records? If you do those three things, I can guarantee you this, that the IRS is going to look at you as a business and you probably will make some money. But let's just say that you're like a lot of people. You get into a business such as, let's use Young Living today. Young Living Essential Oils. Let's use that. I'm just using it as an example. I hope I don't offend anybody. But let's just use that. So, as an example, you go out there, say January 1st, you make a New Year's resolution. I'm going to get in business. I'm going to make some money. And you buy your starter kit. You buy some oils every month. You learn about the product. You go to convention. You go around, you try to sponsor people. etc., etc. And at the end of the year, you didn't make any sales. Let's just say, a lot of people do. They don't make any sales, or they don't sponsor anybody, and they don't make any override commissions. But they spent money. They had an intent to profit. Now the reverse is that if you made money, if you went and made sales and all this other stuff, you report it on your tax return. But let's just say that you don't. Let's see what it would look like if you don't. So we're going to come down here on our basic information worksheet. We have Joe taxpayer and Jane taxpayer. I'm going to use these two people just to show you basically that they have a baby taxpayer, $80,000, both make $40,000 a year, average income, etc., etc. And we're going to go over to the Schedule C, which is nothing but a profit and a loss statement. And we're just going to do our Young Living, Young Living today. Retail sales, various products. Let's just say that this comes up to be a 0. Now, just as an aside, I was in the big A to start out a long time ago. I never wanted to see this be a 0. You don't want to see this be a 0 for more than 1 year. So you got to go get at least a pity sale from your mom or dad, like I did when I was in the big A. I sold them some laundry detergent, and please pay me, even though it wasn't at full retail. So what we did was, I'm going to just quickly zero all this out so we can go through this process again. I should have zeroed it out earlier, but that's okay. Now I can still hear the dog. She's outside of the door. All right, so let's just say, why would you want to report this on your tax return? First of all, because you intended to go out there and make a profit, but you didn't. You still spent money. Now, a lot of people, a lot of accountants, and even the IRS sometimes say, "Oh, well, that's all startup expenses." This is nothing to do with startup expenses. Get that out of your mind. If you go to an accountant that says, "Oh, since you didn't make any money, it's all startup," that's baloney. Okay, you went out there, you did the deal, you tried to get sales, you tried to get sponsorships, etc. And it just didn't work out for some reason for this year. So let's go ahead and do this return. What it would mean to you if you reported it. All right, which you should. First thing is that you probably drove your vehicle. Now we're going to go over to this vehicle area. And that's one of your biggest deductions, is your vehicle. Now, I have up here federal refund $12. We have another little expense in there that I forgot to zero out, but I started at 0 to show you the effect of a home-based business. So here we are, total business miles driven for the year. Now the average person drives 15,000 miles a year. Now in my book, I go over how to convert all your miles to business miles. Chances are, if you did a whole year of business, you probably converted a lot of those miles, and you drove to the post office, you drove to meetings, you drove to, say, your people's houses to try to sell things, you went to the store, etc., etc. Let's just say that you follow my advice and you say 7,500 of those miles turn out to be business. All right? That's not an extraordinary amount of miles. So you own your car, you were going to use the standard mileage rate, which is somewhere every year around 50 to 55 cents a mile. Yeah. Let's head on back. Now you can see already, just by claiming your mileage, your business is getting $534 back in your pocket already. Let's just go down there and find my little, there it is. There's my little gaff. There. So your car right there is worth $522 to you. Now, once again, and I can say this by personal experience, that I've had people come to me and say, well, my accountant said it's not worth me doing anything with my business because I didn't make any money. Well, is $522 worth it to you? $522, it's a car payment, 2 car payments, I don't know. Don't know what kind of car that y'all drive. Okay? Could be a rent payment. It's worth it. Okay? Now we're going to go down here. All these things here. Now let's say you had someone prepare your taxes. We can't do that because they didn't do your business taxes. That's okay, so we'll skip that. Office expense. Now you have a home office. I'm sitting. I just bought a desk, a new desk for my home office. I have decorations in my home office. I have printer, copy paper, etc., pens, pencils, notebooks, things like that. Let's just say that I'd spend $300 in that. Okay. Come on down here. We'll hit supplies later. We'll do that down below because that's what I do. Say that we go to the convention. Say we go to the Young Living Convention. We have a hotel that we go to and we stay in. We have airfare, etc., etc. Let's just say we spend $1,000 to go to the convention. Now we go to the meals and entertainment. Let's just say we spend $200 in meals throughout the year. We only get to deduct $100 of that anyway. That's okay. But every little amount counts. Like I said before. Now look at the refund. The refund is $678, but if we add our meals in there, $200, it goes to $690. Okay? So there you go. $12. Now, does that mean a whole lot to you? You know, if I would come to your house and take $12 out of your wallet or your purse, would you get mad? Of course you would. $12 is $12. All right? Now, we're going to skip over the home office because that's going to be covered in another video. We're going to cover that in another video. So we'll skip over the home office there for this video. Let's go hit the big ones. All right. So we bought a starter kit. Starter kit in Young Living is somewhere around $300. We have a starter kit, and every month, if you want to be on auto ship, they require you, if you want to get commissions, required purchases. They require about $100 a month in buying your oils that you can use for samples or whatever. So $1,200 there. Okay, and that's a lot of multi-level marketing companies have that purchase requirement, and that's a whole other video is why that is tax deductible. A lot of people don't agree with that, but the IRS does. That's all that matters. So. Cell phone, we have $100, about $100 a month, plus or minus. Internet, $80 a month, $960 a year. Okay. Now, this is just the basic things that a business like this has for deductions. Now, up here, say, well, oh my gosh, I'm showing a $9,000 loss. $4,000 of that is your mileage, and the rest is money that you put out of your pocket. All right. So I'm showing a $9,000 loss here. Won't the IRS get mad? Here's the rule. The IRS says you can have a loss as long as you want if you do these things. You have a written business plan. You work your business on a consistent and persistent basis, and you have good records. Okay? The IBM and Xerox and Amazon, they show losses for years and years because of tax deferrals. I used to work for a big corporation called Vanity Fair. They had two sets of books, one for the shareholders and one for the taxes. And what do they show on the taxes? Losses. Because they can. All right. So you see here, you're going to get $1,134 back because of your business. Now there's another thing in here. Once you start, I would start it when I start making money up here, when I start making some sales and stuff. If your child's between the ages 7 and 17, you can pay your child. And they can pay zero or just state and local tax on that. They get out of federal and Social Security tax. You can pay them up to $12,000 a year. Now look at this. This couple had one child. If they pay their child, say, just $5,000. And all that is just paying their child to help them in their business. And then they take the money, the money goes in the child's bank account, and they can use it for anything they want to after that. And there's rules around that, which are in the book, of course. So let's just say $5,000 they pay them. All of a sudden, you got a $1,700 refund. Simple as that. Okay, so here it is. What if I don't make any sales? What if I don't make any income? Should I still report my business on my tax return? Absolutely yes. If $1,134 means anything to you or thereabouts, depending on your tax situation, then I would. But remember that you have to meet those requirements, a written business plan, activity, and record keeping. And they're easy to meet. And I go over them in my book, which the description to the tax portal. It's all electronic now. It's a tax portal. You get access 24/7, 365 for the rest of your days. Once you have it, you have it. It's a one-time investment. Okay? Would you trade $147 for $1,134? Absolutely. One time. That's it. No monthly fees, none of that stuff. No subscriptions. Everything's updated. And there's some extra things in there for different businesses that I come across that I can help. But everything's in that book. I used to do seminars with my mentor called the Six Figure Business School. I've sold thousands and thousands of these, the books. It used to be in a book form. I sold thousands of them for $397. All right. Now it's all digital and everything. I don't have any other costs, so I just make it $147. And you can click the link in the description below and avail yourself to that. And of course, it's a money-back guarantee. I mean, if you don't like it, fine. I'll give you your money back. I don't need the $147, but maybe you need the $1,134. That's the way I roll. I'm too old and too ugly to be messing around. So with that being said, $1,134 for reporting your business that you didn't make any money. It's worth it. But I'll tell you what, I would only let this happen 1 year. Go out there and make some sales to some people, relatives and stuff, help me out so you can at least put a sales number up here. That'll be good. So with that, this is Steve Spangenberg. I hope that you have a very profitable day and take care.